those who are, okay, because there was some technical issue happened yesterday. I did not manage to record webinar. Actually, I paused the video, but I did not resume it. So I'm just going to go through very fast of what was yesterday's discussion. Probably I don't need to spend 1 hour because there was a lot of question and answer session was there. So, but this session is purely the notes. So let's go into it. Now, Price Action Guru's vision. We believe that Forex trading should be accessible to everyone regardless of their background. It is in our conviction that every trader under PAG is as well equipped as a professional and profitable traders. We want to break the boundaries of how knowledge is passed down to the next generation of traders, giving everyone the equal opportunity in finance firm. This is the reason I created this webinar program where I'm going to give you guys so much of information which a lot of successful traders and profitable traders knows, and by the chance novice trader has no way to know all this. So I'm just breaking the boundaries and delivering this to you guys. Now, the updates, last week's trading ideas. I've given out 2 trading ideas, GBP USD, dollar Swiss franc. So if you see, I just took a snapshot of the chart. I was telling to go short at this area. If there's a spike even higher, there's a good area to go short. Told them to buy at this level. Even if spikes lower, there's a good area. Now let's see GBP USD. The price really did not spike. There was no manipulation. There was no manipulation to the higher level over here. So there was like small spike to this zone. So I took a trade. And I took a trade on the 7th. Our webinar was on 6th. So took the trade. It's about 100 pips gain. Okay. And the next trade is USD CHF. So took the trade somewhere over here and closed it because non-farm payroll was last Friday. So I thought of just close it early. So it took at the same time, 7th January, about 34 pips gain. So overall, it's about close to 134 pips gain. That's in 1 week. And if you have put 0.01, you have gained so far $13, almost $14. If you put 0.02, that's almost $28. Literally, you can cover the webinar cost in 1 week. Okay, this is last week's signal. Now this week, before I just jump into the trading context or trading program, I just want to explain to you guys how our mechanism works. I've created two places for you to learn. First is the webinar program. Every webinar program will be given to you via WhatsApp or email at the moment. So soon, by next month early, February early, everything should be automated and everyone should be receiving an email. So if you don't receive email, you should communicate with the team to get your email login for Zoom. And those who miss to watch the webinar program, you just can go to webinar portal through this link over here, priceactionguru.com registers. First you register. Within 24 hours, the team will approve it. And once approved, you can log into the webinar priceactionguru.com page webinar portal to access your webinar modules. So these are the updates I want to update you guys. And those who enroll to the program, the webinar program is designed such a way I deliver the knowledge through webinar. You can ask questions during the webinar session, not in WhatsApp, send me your charts, because I cannot be entertaining everyone for this because I have a lot of students who are taking personal coaching and boot camp. So my time is dedicated for them. At the same time, I want to add value to you guys through a webinar. So hope you guys can collaborate with me on this. Okay. Now, teach me series 2. Why is stop loss hunting always taking place at a support and resistance? So like I mentioned yesterday, there's a two concept over here. Pro trader versus retail trader and high frequency trading, HFT. There's two concepts which you need to understand before jump into why stop loss hunting taking place for some reason. A lot of beginners believe that broker is monitoring your trade, broker is looking at your chart 24 hours. That's why they doing the stop loss, and it's not correct at all. So let me explain to you guys the concept. Now, HFT, I believe you guys know by HFT. HFT is a high frequency trading. It's a supercomputer which as big as 20,000 square feet, and so much of server is involved. It's a big infrastructure. Now, a person to take a trade, a retail trader, probably take half a second to take a trade, half a second. Within the half a second, the supercomputer will enter 500 entries, go in and exit with a nano profit. So literally the supercomputer is super fast. They can't beat it. And the supercomputer understand how the market makers thinks, how the retail traders thinks. So they always set so much of trap for us to get into the trap. Like what? From everyday morning, Japanese market opens, the volume will be like very low, and the market movement will be like this. So they know a lot of traders who look at the chart, they will be going to buy and sell at this level. So they will create a very smooth liquidity. So you'll be like thinking of selling here and buying here. So once you see this, once you start buy, what happened is price drop. When price drop, when this kind of movement take place, those who bought undergo fear. Those who see this as opportunity, they will be start selling here because of the greed. And those who bought here going through fear. So they'll be scared because price is going against them. Those who sold, they want the price go even lower because of their soul, and they want the profit. So when these things happen, literally the market makers, the HFT, already attracted two group of people: those who are fearful, those who are very greedy. So once this happen, their money is on the market. They can push the market and do all sort of movement because the emotion is tied. Emotion is tied to the position. So once they become stressful, they exit, all the money left in the market. So this HFT is very interesting, and I want every one of you guys to understand, learn, read up about HFT, because HFT is very, very important, because 70% of the movement in the Forex market is done by HFT, not real traders. 70%. Sorry, 70% of the movement is done by HFT. So let me show you another example. So when you see the market movement like this, a lot of traders will be selling here. They think this is a very good sell area. They'll be selling. Once they start sell, price may just drop a bit. So they feel happy and more sellers comes in to sell. Then you will be looking at a market. All of a sudden, there's something like a sudden spike to this area where generally people place their stop loss above the high over here. So price goes to the territory, and the best part is once price goes to this territory, it will be staying there for a few hours. Then a sudden drop happens. So what happened over here? Those who sold here, their stop loss is hunt, and price over here is just to confuse those who still holding the trade, to make them let go the trade, and then price bleed lower. I can show you ample of examples on the real market. This is done by HFT. And HFT is the one to really understand human behavior, how the retail market traders think and everything. Now, another example, another concept that I want to explain to you guys, which I did explain yesterday. We're just going in very short, fast and short. Okay. Another concept is when you see market like this, the retail traders and institutional traders, this is a very clear signal that it's an uptrend where market is creating high, low, high, high, low, and low. Everyone knows this is uptrend. So what normal retail traders will be doing? They just buy over here. They just buy here. Buy. Some of them will buy here, and generally their stop loss somewhere here. And let me put it in the word SL. Yeah, SL over here. So when you can see as a good uptrend, do you think the institutional traders don't see this as an uptrend? They also do see uptrend. So what will take place is that retail traders, when you buy, your orders always get filled because you're entering a very small volume, and most of the trade is B book. But when institutional traders place the orders won't get filled. What is by filling? Let's say you place one lot, there's a buyer who willing to sell to you. That's why you can buy. And up to 50 lot, it shouldn't be a problem for retail market. But institutional traders might enter 3,000 lot. So their orders will not filled. When they want to buy, someone have to sell. When everyone on the planet is ready to buy, who will be selling to them 3,000 lots worth of things? So what the institutional traders will do, they will move the market in an opposite direction. Okay, opposite direction for two reasons. Okay. They bring the price like this for two reasons. One is to create a, to create a false move, so that lower time traders believe that it's actually really downtrend. Second, those who bought earlier, those who bought earlier if their stop loss is taken, those who bought earlier, their place stop loss is somewhere here, this area. When the stop loss is taken, when they bought and their stop loss is hit, that means they're selling. So when they sell, this institutional traders 3,000 volume will be get filled. Their orders get filled gradually, and once the orders fill, the price shoot up immediately up. So this is what you see on the real market every single time. Now let me show you the chart. Okay. Okay, this is oil, which I've taken on a live account. Now, a lot of traders knows this is uptrend up to this level. It's a very clear uptrend. So what I did was I took a trade over here. A lot of people entered, their stop loss would have been somewhere here. Some of them, their stop loss is somewhere here, just below this. The stop loss is taken, then price shoot up to the high price. So I exceeded somewhere here. Again, you see, the thing took place again. A lot of people, looks like support, they went and bought over here, and their stop loss is just below the pin bar. So I bought at this level and I exceeded somewhere here. So this one example which I shared yesterday. Okay. Another good trade that I took. Okay. Okay, this is another good trade. This is where the stop loss is placed. This is very clear downtrend. This is second level stop loss. And in fact, some people place the stop loss here. So what I've done is, I know everyone on the planet knows this downtrend, but the institutional traders add liquidity to hunt the stop loss so that their orders get filled. Once it's filled, I took at the highest price and I exit somewhere here. It's a very good drop, so made a good money. This is on live account. This is one a good example. And Euro CHF, I did the same trade, but this pair I exceeded early, you see. This is where first stop loss, second, and third. Wow, even at this level, they did the stop loss hunting. So price, institutional traders, they want to sell, they bring the price as high as this level, do all the stop loss hunting. Those who sold early, they will take their trades out, and then they move the market down. So if you see the examples I've shown, this is a good example how the market mechanism is working. Okay. So I've explained, this is what I explained in depth yesterday, but I'll just give you the overview. This is the concept of how institutional traders orders get filled and how HFT understand the traders and they create artificial movement. So for this week's opportunity, what I want you guys to look is New Zealand yen. I'm looking to go short at these levels. So I'm looking for price to drop. That's first opportunity. And second opportunity, I'm looking for GBP yen to go short. I'm expecting the price to go even slightly higher to this territory than to go short. So I wouldn't be selling at this level, but it's actually already in downtrend, but I look for better risk reward. So those who are watching the video, and like I mentioned yesterday, I've integrated another program, another slide actually, not program, slide. Inspire Me Price Action Guru. Every week I will pick one of my students' testimony, life account. This is uploaded in my FX book. This is a real account, GMI 1 to 2000. This person is actually 65-year-old. He's deposited $100 on his life account, and he took a personal coaching session with me for 2 months. So my concept is I taught him how to turn his 100 USD to 300 USD. Now it's 333. So he made close to 241%. So now he's ready to increase his capital from $100 to 1000 USD, and he's able to turn 1000 USD to $3,000. I think you should be able to withdraw $2,000 every 2 months once. So you have developed a skill, and this is this account history where you can log in my FX book and see over here. So on 2019, we have 126,000, 126%, and this month is 50% so far because it's just half of the month. So that's all which I covered yesterday, guys. So my apologies because the video is very short because I did not click the record button. It will not be repeating again. So see you guys on next week. The next 6 topics going to be which time frame is the best time to trade. Okay. Take care. Thank you.